Hey everybody, this is Jackie Panetta and welcome to another video of Trading with Jackie. We're going to go over the pound dollar wedge alert that I received this morning and how I worked through it and see if this might help you out. I mean, this doesn't always work for me. Each trade is different, but this is how I worked it out. So it was an ascending alert, and I was taught ascending alerts means you're looking for a sell, descending means you're looking for a buy, but you know, it can go either way. You kind of just need to go by how price is working, because a clear example is we just received an alert recently of a New Zealand dollar to the US dollar, and it was ascending, and that sucker kept ascending. You know, even though I was looking for a sell, it kept ascending. So you know, you got to follow what price is working with. But here we go. So this vertical line signifies when the alert came through. This is my wedge, so I usually look for 2 points prior to the alert, okay, to draw my wedge trend lines. I'm not a great drawer, but this is what works for me, okay? And it was an advice that I took from someone who said look for the 2 points prior to, and that was Matt. If you guys know who Matt is in the Aries Telegram channel, that was one of the things he showed, okay? And he also was the one that showed me about the vertical line, and they are the ones that told me to use this website, tradingview.com, for charting, and it's been helping me out a lot. Okay, so here we go. So now with the alert already here, you know, we want to look for the next candle after price breaks out of the wedge. So since this is an ascending wedge, I'm looking for price to break out of the wedge at the top, and then the next candle after is when I want to do my sell. Okay, so price didn't break out till 8 o'clock. All right, cool. So I'm not doing nothing on this right now in this trade. Okay, I'm telling y'all how I worked it. So then the next candle after that is what I'm looking for my sell. Now if you was to just go ahead and I guess take your candle right when it opened at 22.63, that's fine. You would have, if you had a 5 pip stop loss, you would have been stopped out though. So if you was going to do that, 10 pip stop loss is what I normally have when I first open an initial trade. I wouldn't have got stopped out. I would taken it at 2263. If you go by the basic rule, right? Second candle, not even looking at RSI, because RSI had already dropped a little bit, you know, as soon as the 8:15 candle started, so it already signified the drop. All right, so but it was out, so it didn't hit the 70 or whatever for the RSI, but what it did do is that it started to signify the drop. So that would have been a good indicator to put in a sell. One thing that I did though, I went to the 1 minute chart, and this helped me because now let me move it back a little, because we're a couple of days ahead now, we're a couple of times ahead. All right, here's that 7:45. Here's the wedge. Okay, so if we're looking at, here's the 8 o'clock. Okay, 8:15. All right, 8:15. So when it opened 2263, if you would have took that, that's fine. Like I said, if you had a 10 pip stop loss, you would have been kind of cool because it didn't hit you, but it did hit anybody with a 5 pip stop loss. Okay, so you know, but I usually keep it with a 10 pip. So if I would have went in at 2263, just based off the basic rule, I would have been cool. Now RSI was not my confirmation to say yes, go in, because it was like close to 70 or nothing. RSI was the confirmation signifying from one candle to the next that it was dropping. Okay, whether it continued to do so is different, but it dropped from that one candle to the next. That's one indicator. All right, now but if you go to the 1 minute chart, you see price is hanging right between 8:15 and 8:30. Price was hanging above the wedge. Now but remember, in the 8:15 candle, it did break out the wedge on the bottom, signifying the drop. So what that tells me is, here's 8:15. If you look at this, here it goes, boom. I want you to follow each candle. Look at the RSI, up, down, up, down, up, down. Okay, it's being finicky, and then it drops, right? That's one drop. I wouldn't have done anything here. If you didn't get in at 2263, I wouldn't have done anything here, right? I'm like, all right, that's one drop because it was being finicky the last couple. Boom, next candle, next drop. That's a clear indicator. And look where it drops to, 2263. So if you didn't get in at 2263 in the beginning of the candle, boom, it came right back to you. So that's 2 minute candlesticks where RSI is weakening. And then here it goes. It tries to strengthen a little bit, but it don't do too much. I could have got in here again, right? This ain't do nothing. It only just moved a pip. It ain't do nothing. Boom, next drop. All right, so here's another clear indication to get in on a sell again. All right, it's still above the wedge. Okay, and that's already 2 pips made if you came in at 2263. All right, it went 5 pence against you, but if you ain't had that stop out, you know you now in 2 pips positive, right? So boom, here we go again. Here's a clear drop. Okay, so 2263 down 5.6. Okay, that's nice. That's 6.3 to 5.6. Okay, you almost at 10 pips right there. Okay, so that's a 7 pip drop. At this point, you already see it's going down. You know you in a clear sell, so you jump in. So at this point is when I jumped in. I got in at 2258. Okay, because I didn't like it that it was being finicky like this, and plus I'm not confident with how this currency works too much, so that's why I hesitated, but I still saw an opportunity to collect 5 pips for sure. That's why I jumped in when I did. So I came in at 2258, boom, breaks out the wedge, right, and then it continues. It kind of hovers a little bit, and then when 830 came and wanted to stay around there, drop. Okay, and there you go. So I made my 10 pips as soon as it collected 5 pips for me. So if I got in at 5.8, when it hit 5.3 down here, that's when I put on my trailing stop loss, and I have my trailing stop loss at 3.5 pips right now, but that's because I'm not really confident with wedges. I'm just learning, but this is how I walk through this one. I put it at 3.5 pips, so that way I've secured 3.5 pips. And as it continued, and I was confident that this was going to continue to drop because RSI on the 1 minute was dropping. And then if you go back to the 15, and I'm gonna have to move the screen a little bit so you can see it, because this because I moved it when we were in the 1 minute area. Let me get you to the where we at now. Okay, so yeah, so as you can see, here's 8:15. That's when it broke, and I got in at that point. And then look at 8:30 candle, broke even more. All right, significant drop. So anybody from 2263 down, okay, that it got as far down as 4.3. That's a 20 pip drop. Okay, so that's pretty good. That's a 20 pip drop. I caught 10 of those. I think 10 or 11 of them. Okay, and that was me coming after the fact, and I still caught some, but at least I caught my minimum of 5. All right, and then you clearly see, remember, it was the 8 o'clock 15-minute candle. RSI dropped on the 8:15, significant drop at the beginning of the 8:30 candle, which is kind of where you can get in at if you didn't get in on the 8:15 when I did. So I got in just before the 8:30 candle came because I was looking at the 1 minute chart. Okay, and that's how that worked for me. Again, the key factors was a lot. I mean, that took a lot to go through. This is almost a 10-minute video. That's a lot of analysis that I was doing, and I'm just now learning this, but that's how it worked out for me. So the key takeaways in this is it may not have fit the RSI 70-25 criteria, okay, but if you watched how price was moving, you can use RSI indicator to help you determine a little bit better on when it's time to get in. Draw your trend lines like I did. Mine aren't that great, but this is what helped me guide it through. Hopefully me talking this out worked for you. Things that I know now that helped me is I need to be a lot more confident on my entry when everything is confirming to my rule. You know, I could have caught another 10 pips on this, but hey, the goal is a minimum 5 pips a day. If this was your only trade for the day and you caught 10 pips, you made gold for the day. Shoot, you made gold for 2 days if you're only supposed to collect 5 a day. I mean, the general consensus that I'm working on with my trading plan is to collect 25 pips a week. And that's it. I don't need to collect no more. And I met my goal for the week. So, you know, 1 or 2 trades in a day can let you chill for the rest of the week. So that was my analysis on the pound dollar. Hopefully this worked out for y'all. I had another video on trailing stop loss, so hopefully, you know, if you need that, I'll send it to you. Sorry this video took so long, but it took a lot of analysis out of me, you know, to go through that. And then look at that. After it did that, look at how RSI signifies that strength of the pound moving up. So that's nice. But anyway, and we didn't get no alert on that because it wasn't really a wedge. But anyway, so there you go. That's my analysis on this pound dollar wedge alert from 7:45 a.m. You take it as you will. This is just what worked out for me. I'm not saying that this is any financial advice. I'm not saying that this is the way to do it, because I by no means am I an expert. But hopefully, if this information helps y'all out, you know, I'm willing to share it. I'm willing to share my experience. All right, take care, y'all.